Welcome to the ESI Africa studio. Today I'm speaking with Ashwin West, who is the Investment Director at the African Infrastructure Investment Managers in South Africa. Ashwin, we've just been talking about you spending a little bit of time in Mali recently with a project that has now been nominated for an award. But let's start a bit with, in view of the global financing and investment landscape, is Africa's infrastructure investment landscape on par with the global trends?
Thanks, Nicolette. So, I think what we're seeing is, infrastructure is clearly key for economic growth and to improve the lives of people. And if we look at what's happening in the rest of the world, in the developed markets, water infrastructure is really key, transportation infrastructure, as well as electricity or power infrastructure is key. If we then look towards the developing markets in Africa specifically, exactly the same trends are happening here. Of course, a little bit behind, but of course, there's a big focus on transportation, on electricity, and on water infrastructure. I think if we look at what's happening in somewhere like Mali, for example, Mali has had a big power deficit. They've relied quite heavily on hydroelectricity historically, so they've had about 60% of their electricity comes from hydropower. And they've also had to rely on emergency power, which is diesel-generated electricity, which is fairly expensive. And so over the last few years, the Malian government has been looking to do a number of things. One is diversify away from hydropower and have some other sources of baseload power. They've also looked to reduce their cost of energy by bringing in cheaper power. And so that's where a project that we've been involved with more recently called Albatross Energy.
So they're looking at the whole energy sector?
Absolutely, yes, yeah. And so they've introduced independent power producers, which is a new thing for Mali. And Albatross Energy is the first project in that sort of space. And Albatross has resulted in some further projects being brought to market. They're two solar PV projects, so renewable energy projects, which are going to add to the mix of energy in Mali. So I think it's changing the landscape, and it's moving towards something which is different and following trends which we're seeing elsewhere on the continent and of course elsewhere in the world.
Right, exactly. So definitely Africa, you believe, is following the trends or setting their own pace?
Definitely following the trend of what we've seen elsewhere, and a lot more private investment is coming to market now. Historically, obviously, it's been government investment, but now there's a lot of private sector investment, and that's really what we do, is bring private equity into the infrastructure space on the continent.
Now let's talk a bit about government policy and regulation in Africa, and whether this is actually helping or assisting IPPs to develop themselves.
It's a good question, and I think what we're seeing is, what we as investors would like to see is policy and regulation which do a couple of things. One would be making the investment process more efficient, so supporting investment, and then also reducing our risk and basically the renegotiation risk that comes with long-term investments of the nature that we make, which are through concession agreements or power purchase agreements, so long-term 20 or 15-year contracts with government. So in terms of how policy assists, well, absolutely it does, and we're looking for policies that are going to make investment more efficient, so reduce the amount of time required to make an investment, and that could be through things like policies that assist us in permitting, getting permits and licenses in place more efficiently. And then also things like tax exemptions. Those are very helpful in terms of encouraging investment into the country, as well as making the ultimate end product, so let's say electricity, cheaper for the end user. And then of course, like I say, the renegotiation risk. What we look for there is some sort of support from national government, that in the event of some event happening, that government won't try and renegotiate, and that they will protect us as the long-term investor. And so what we see there is sovereign guarantees to assist us in protecting our investment and mitigating that renegotiation risk. Of course, the converse is true, and when one doesn't have some of those mechanisms in place, then it becomes really hard to make those investments, and typically it takes a lot longer to bring an investment from concept to actual execution.
So we're almost running out of time, so I just want to ask you very briefly, what is it that a project investor is looking for?
I think there are probably three key things, or maybe two, but the one is a very clear procurement process, so that it's above board, there are no questions that can be asked, so an efficient process that can be replicated. The second thing would be, so I said, yeah, investment efficient process, and then something which is competitive, and I think the third thing is around, I guess, risk-adjusted returns. So we're looking for we're looking for a return that's appropriate, and for a project that has been appropriately mitigated from a risk perspective, and we're looking for a return that matches that risk mitigate and adjustment.
Very much like your project in Mali.
Exactly like the project in Mali. I think what we've delivered there is something which has got adequate risk mitigations in place, and what we've delivered to the government of Mali is a project which delivers a very good electricity tariff and also provides an appropriate return for the investors. So exactly that.
Well, thank you very much for joining us here at the studio.
Thanks, Nicolette.
And thank you for watching. I'm Nicolette Pomba-Van Zyl, editor of ESI Africa, coming to you from the African Utility Week studio.